Thanks for joining us here on The Open. A big theme on the program today has been the oil price slump, not just globally, but here in Canada as well. One of the most frequently cited factors for the oil price problem has been access to markets, in other words, the pipeline capacity, but also the overall production levels out of Alberta, which have been near records. To counter that, Cenovus CEO Alex Pourbaix is calling on the Alberta government to mandate cuts to oil production in the province. And Alex Pourbaix joins us this morning from Calgary. Alex, thanks very much for being with us. Maybe just set the stage on what you have been trying to accomplish, given what we're seeing with the price of oil right now.
Sure, happy to do so. I think everybody has seen the situation that's happening with oil prices in Alberta right now. The last time I checked, our oil is trading at somewhere in the range of a $43 US discount to WTI. And the amazing thing about that is right now, heavy oil on a global basis is actually trading at a premium to WTI. Canada is right now achieving the lowest price for oil in the world. And as you said, that is entirely related to what amounts to right now a very small imbalance of production over supply. Peters and Company just recently estimated that oversupply was somewhere in the range of probably 200,000 barrels a day overproduction over takeaway capacity. But that very modest overproduction is driving a catastrophic impact on the industry's revenues and will drive a catastrophic impact to government royalty revenues. Peters and Company estimates that if differentials stay in that $40 range for 2019, the impact on Alberta's royalty take from heavy oil alone would be in the range of $5 billion. So we are talking an emergency situation and a very serious situation.
So Alex, you've been out and you've been making this case quite publicly. Since you've made these statements, what has the feedback been from your community, from your competitors, and from politicians? Do you get a sense that you're actually getting any momentum on this idea?
Yeah, you know, I think so, and I think you guys know that our industry is a fiercely independent industry. The last thing we would typically want to do is look for solutions from government. But I think that the problem we have right now is we have a complete failure of the market. We have not been able to build the pipelines necessary to get our product to market, and that has created this extraordinary situation that is costing, if you listen to the National Bank, for example, they estimate that these differentials are costing the Alberta economy $50 billion a year. So I just think people need to remember these resources actually belong to the people of Alberta, and when the market isn't working to get this oil out of the province, I think this is one of those very rare times when we look to the government. And you know, well, the other thing I would say is this is an acute problem, but it is a relatively short-term problem. I would expect we're going to see rail and Enbridge's Line 3 come into service in Q4 of next year. So probably by 2020, we'll be in a much better situation. What we're trying to do is see the government take very moderate action in terms of production levels in order to avoid an economic catastrophe for the province in the interim.
Wouldn't it be economically painful for those producers that have no offsets? Because if you applied this cap on drilling, it would affect those in the industry differently, depending on whether they were a pure play or if they were able to offset with a refinery, and that could potentially result in layoffs, which would affect the very people that you think are being harmed by what's going on in Alberta right now.
You know, let's be clear. Right now, at the price that Albertans are getting for their oil, nobody is making any money whatsoever in the upstream industry. At the same time, a small number of producers who are integrated with refineries are making windfall profits, historic profits. We're not talking about taking those profits away. We're just talking about stopping those last marginal barrels that are creating almost no value to the Alberta economy, but are driving catastrophic impacts to the province and to the industry. Nobody is going to be needing handouts as a result of the very modest production cuts that we're talking about here.
Alex, is this costing you shareholder support? And I ask that question because you know as well as anybody that this week we saw a large energy investor in Capital Group. They have investments in many of the leading companies, including in Cenovus, a large shareholder through their various funds. Darren Peers there sent this letter to the Prime Minister where he said Canada has to do something about market access or it's going to cost us as an investor in Canadian energy companies. Can you tell us a little bit more about your ties to that story? Have you heard the same feedback from your investors, from Capital Group? What do you think of that letter that he sent to the Prime Minister?
Sure, I have heard a very similar message from most of our shareholders, and the point I would make is this is not simply international or American shareholders. I'm hearing this from large Canadian investors also. There is no doubt right now that investors are looking at the Canadian energy sector as a very risky place to be. They are looking at the industry. They fear the industry is falling behind the U.S., and they are ascribing a very significant level of sovereign risk to investing in our country. And I think legitimately are very, very concerned about the market access issue. As everybody knows, we have some of the best, most environmentally conscious oil and gas production in the world. But if we can't get it to market, it is going to have a very material effect on investment in this sector and access to capital.
Does that increase the risk that your top shareholder, ConocoPhillips, which owns about 17% of Cenovus, might want to expeditiously exit their stake, given the risks you've highlighted?
You know, I can't speak for Conoco. I really only can take my guidance from what they've said publicly, and certainly what they've said publicly is that our company right now, at our share price, they see it as massively undervalued, and they've indicated that they intend to have some patience and wait for better times. I think they're a very thoughtful investor, and they're not going to do anything rash. Just
thinking back to the deal, though, of Cenovus, at the time, a lot of people kind of positioned it as doubling down on the oil sands, which predates your time as CEO. But would you have done things differently, just looking back at where we are right now?
You know, I don't think, even if you think about the time that deal was transacted, you know, I think people had modest concerns about market access. But at that time, we had TMX, we had Keystone XL, which was coming back. I think Line 3, I think people were generally reasonably confident that the pipeline infrastructure was going to be sufficient to take away the production out of the province. And obviously, it hasn't turned out that way with the challenges that TMX and potentially Keystone are experiencing from a legal perspective.
You know, given what you just said about ConocoPhillips' view of Cenovus being massively undervalued and the situation you think can improve in the future, have you seen industry players become opportunistic? Has Cenovus been approached for potentially an opportunistic takeover target?
No, I mean, we obviously would never talk about any approaches like that. And right now, I mean, I look at my company. We are on the things that we can control. The business is going very, very well. Unfortunately, all of that is dwarfed by this really short-term and modest oversupply situation. But it's just having an absolute catastrophic impact on the industry and on the province's revenues.